So I wanted to circle back over to Fibo Quantum, and for this video I'm going to use the daily chart of the Euro US dollar. And before we get started, just remember this is the 100 period simple moving average that I'm using, okay, for trend determination. And we're going to take a look at this, what I'm talking about. The must-read rules on using Fibo Quantum, and a lot of people don't follow the rules. You know, I've gotten too many questions in YouTube, and the answers are in the document itself. So we're going to quickly go through these. Rule number one: do not use it on a flat market. Now, even if it says, you know, use it during certain sessions. Well, when you're looking at stuff like daily charts, I would ignore that rule. That's more for intraday trading, these kind of sessions. But simply what it means is this, you know, a flat market, this is flat. Now, you're going to have to determine a way to figure that out. What is a flat market? And probably the easiest, I'm going to say easy, but the fact is nothing is easy in trading. Let's just say, you know, when the market stops making higher highs and higher lows in an uptrend, or lower highs and lower lows in a downtrend, well, then we're going to be in a consolidation. So, for example, we've got this high here. This, when you start seeing this, this barely breaches it, right? So you don't really see any, this is more like a reject of the side, the upside. Price pulls back down. Now look what we have. So remember the pattern for an uptrend, higher high, higher low. So we got our higher high from these highs over here, higher low, slightly higher high. Now price didn't even close above this high. So right away you could start saying, this is not an uptrend. Our uptrend's in danger. We didn't even get a close above this. Yes, we got a high, but we don't get a close. So is this really a high? You're going to have to write that out in your trading plan. For me, a little poke above, this is actually a trade entry to the downside. I call them failure test trades. So these are short trades for me. And then we've got, so let's just say you consider this to be a high. Okay, and it's not, but if you do, and then what should have really, this candle here should have really taken you, you started thinking that this is no longer an uptrend. But if this is a higher high to you, what you've done here is put in a lower low as opposed to this one. So when you start getting this, now we've got a market that is no longer making higher highs and higher lows. And you can actually draw, you can start drawing these kind of shapes which indicate a consolidation. But the simplest way to ever do something like this is look at the pattern, higher high, higher low. No, we draw our lines. Now we need price to break out of this before we start taking trades. Okay, so that's one way you can look at it. Number two, identify a global trend. Ignore all signals against it. Do not use the indicator on a sideways trend. Basically, it goes back up to flat market. And for global trend, there's so many different ways, but here's the thing. We want to keep as little discretion in our trading as much as we can. So by using a moving average of 100, simple moving average, for example, you can use whatever you want. I use this because these spaces between the entries and the targets on these higher time frames, you know, they're pretty wide. So you want to give yourself enough room. Okay? We certainly don't want to have sells and buys in an uptrend, even though you would ignore the sell. All right, we just want to give price room to run. These will actually change depending on the market. Before entering, yeah, you know, watch the news. But again, if we're trading higher time frames, like I'm a fan of, then the news is not going to really bother me too much. Number four, avoid opening a new trade until the previous trade on the same pair, like I said before, this has been closed. Ignoring this rule would break one of the most important money management rules. Yes and no. Depends on what you risk. Basically what it means is this: if I'm already long here, okay, and this tells me to go long, I'm not going to go long. I'm already in a trade. Enter trades only when the price reaches the entry lines, and avoid entering trades after the price goes past the generate line, which means this. Use this buy entry here. Whether you would take this or not, you know, don't ignore price, okay? Don't ignore structure. You can't. It's not smart to do that. And you can certainly trade this mechanically. But the fact is, this buy entry sets up here, right? See where it starts plotting here? Right here. price action should tell you, or even just momentum, when you get price rocketing from a low, generally the trades don't work out. That's even more so when you're trading a range. So let's say this is a range of price, and price rockets from the low of the range out, you're going to get this pullback. More times than not, that's where the probability is, right? We want to see on breakouts, for example. This is an off topic from Fibo Quantum. If this is my range, I want to see price ranging just below this level. You can actually position inside these levels. But anyways. Avoid entering trades when, okay, which that means this. So let's say this doesn't tick in here. And let's say it ticks in over here. But this line stops printing, you can't take the trade. Avoid entering more than one trade per one set of lines. What that means, and that's actually really good because it's going to stop you from getting whipsawed in and out of trade. So hypothetically, we go to buy entry here, price zips down, gets you in a sell entry. So basically you'd be in the buy, you get stopped out, you're in the sell, right? Don't do that. That's whipsaw. You can do it if something else plots, but do not do it on the one set of lines. Another thing I want to talk about is when you can use this 100 period moving average. We use this if price is above or below it to determine a trend we're going to trade. We could certainly use the slope if you'd like, but for me, this is easier. You see the breakdown below? Here's a great lesson in risk management. So we have our buy entry here, our buy stop loss, that's our risk. Well, you see price gets down to here. What you can do when price closes below the 100 period moving average or above, if you're short, exit the trade. Okay, so example, if you're risking 2% on this trade, the trade pulls back, but it breaks through here, you're out of the trade, you don't lose the full 2%. All right, risk management is huge. For example, the sell entry, even though you get to a profit target, this was the last one on the euro, and the trade triggered in on the 9th, sorry, on the 8th. You know, this trade ran for 162 pips before it came back up. All right, so you did have time to profit from this trade. Sell entry on this trade here. So these are two winning trades in a row on the daily chart. You get into the trade here. This is where management of your trade is going to come into what you're going to do at these different levels. But if you just held on till price got, well, price even gets down to the third, just ticks the third. So this is a 690 pip trade. If you got out here, this is 494. This is 300 and change. So these are winning trades here. Go back over here. This is a sell entry there. And people go, well, you got into trade here. I want you to understand something as well. And if you took this trade and you held on when this is coming down, you know, that's on you. There was nothing, like I said before, price didn't close above this high. Something to consider. And this has also been a long, extended trend. So let's say, for example, this is where it really began to turn. You know, when you've got, this was back in May. Sorry, this is back in April that the trend really started to turn on the euro. And this trade comes, you know, back, that was back May last year. This is a long running trend. So our buy is here. That's 562. Then we get over here. Now, we go back to our rules. This sets up above our line. Do we take that trade? If you go back in my videos, the answer is no. It doesn't matter if this happens here. This setup above our moving average, above our trend, we cannot take a sell trade here. And you wouldn't get the buy entry either. Remember that other rule. This is already printed out. You cannot take this trade. This stops printing here. You don't get in this move up. And you got that. So you would have the one trade here. And some traders that have emailed me, well, not emailed, but through YouTube, have got into these trades and they would use the 100 period moving average with a bit of a buffer as their exit. So the ones that have done that on this trade, for example, it doesn't make much of a difference. But you're looking at about, well, I guess it does, 723 pips as opposed to 5 and change. So it does make a bit of a difference. So that's on the euro US dollar. Let me just bring up one more currency pair. I'll bring up the pound US. One sec. Same thing. Conservative setting as well. Okay, keep that in mind. Again, these are one of these trades that it just keeps coming down. So usually, if anyone's trade pullbacks here, you've heard the rule that the first pullback is generally the better one. And the reason why people tell you that is because as trends get extended, the chances of a stronger correction are higher. And that's a fact as well. Eventually, that's what's going to happen. Things can only be sustained for so long. This sell entry happened back in May. So you sat through some chop here, that's for sure. But your stop didn't even get touched. Didn't even get tested. And you weren't underwater. If you got in this trade here, your trade never really got underwater at all. And, best case scenario, you got 800 pips on this trade. How much further did you have to go? You had to go about halfway to get here. That's a pretty good trade there. Our sell entry is here. You got down to take profit once, so it's 200. If you get out here, it's 480. This is 782. These are good trades. What happens over here? Our buy entry gets stopped. It stops printing here. We can't take our sell. This is a no trade here. This buy entry, this again, it stops, right? And you can see this has crunched this chart up. Let's see this market here. This is actually pretty decent because we're in some sloppy price action here. And we have a buy entry here. Almost gets here. Comes back. The buy stop loss is here. If you would have used either stop, you would have got taken out. But here's a rule that you may want to consider. And it has to do with risk. And I know a lot of people talk about risk reward. Risk reward, we'll never know our reward, but we always know our risk. If you are in this trade and you are saying, well, it didn't touch this, so we had to go from, what's the high end here? This was an extra 31 pips, okay? If you're in this trade and you're going to let this trade come all the way back and stop you out, to make that extra 31 pips, you are going to risk 377 to make that extra 31. Does that make any sense to you? No, it doesn't. It's very important that when you're trading this, if you get halfway to your target, do something. Cut risk, go to break even, do something. Do not ever let this happen. If this happens to you, you should rethink your whole idea of trading. Don't get hung up in risk reward that you have to get 3-to-1 reward to risk to be a good trade. No. And a lot of times going for those runs of a reward of 3-to-1 risk can have you giving back so much of your profits. When you talk about risk to reward, reward to risk, however you're phrasing it, just make sure you write the numbers down properly. Don't get hung up on that. Do not get hung up on that. You cannot measure reward until it happens. So anyways, that's it. Yeah, I just showed you 2 quick pairs. And I talked about using the 100 period moving average. Talked about some of the rules. Talked about getting out of the trade earlier if price breaks our 100 period moving average, which is really, really good. If you for risk management, trade management, very important to do. You can trail your stop along the 100 period. It all depends on how you do it. And that's it. So click above, download Fibo Quantum. I know I don't do a whole lot of videos of this. It was summertime. I don't do a whole lot in the summertime trading. I trade longer term charts anyways. Give it a go. It's still one of my favorites. This and Forex Trendy are the products, the only 2 products right now that I really care about. Thanks for watching.